All right, welcome back to the channel, everyone. I'm your host, Bryant Mora, here at Raising the Bar Self Mastery. We're here to help you become the best version of yourself, and we are eternally grateful for your continued support. We're excited to have you a part of our community of like minded individuals on a journey of self improvement. So our videos here, they're all about getting you to the next level, striving for consistent growth in every area of life. From practical tips and advice to motivational content, we're here to provide you with the inspiration and tools that you need to reach your personal goals and unlock the full potential that you have. So sit back, relax, and get ready to be inspired. All right. So, as you guys know, I'm a licensed life insurance agent. And today's video, we're going to be talking about understanding life insurance and how it really works. I'm an independent broker, and so I'm able to, get our clients with more than one company. So today I'm going to be sharing you a pamphlet from one of our carriers. This is from our carrier, National Life Group. And here we're just going to read this brochure together with you. Understanding life insurance with living benefits. So, what is life insurance? Well, life insurance helps you, your family, maintain their standard of living if something should happen to you. Life insurance is a very important choice. A life insurance policy can potentially provide your family with enough money to fulfill their obligations and pursue their dreams. Protects against loss of income if you should die too soon. It helps secure your family's future even if you are no longer with them. Now, a permanent life insurance policy with cash value may be also to help meet accumulation goals if properly funded through cash value policy loans and withdrawals, such as you could help to fund your children's education, supplementing your retirement income, assist with expenses if you become disabled through the use of living benefit riders. And riders can be added to provide you with benefits you may use throughout your lifetime. These are called living benefit riders. These riders can accelerate the death benefit should you become ill or injured or potentially provide a guaranteed source of retirement income if you live too long. There is a choice of products and riders to help meet any lifestyle. So look at this. Life insurance is a very important choice. It is, okay? Especially, guys, if you're the breadwinner and people are depending on you to survive. You're their means for survival, okay? So this is a very responsible thing to be thinking of and then actually implementing and put it into your life, okay, guys? So how does life insurance work? So you're going to make payments called premiums to a life insurance company. The company agrees to pay a specified amount to whomever you designate to receive the money from your policy when you pass away. Who needs life insurance? Well, most people need life insurance. So here's a quick list of some of those people. Those that have dependent children, an older family member who depends on your wages, people who need help meeting retirement goals, newlyweds, a young couple planning to start a family, a current homeowner, families with special needs children. So, regardless of your life stage, life insurance could proved to be one of the most valuable financial decisions you ever make. So, what type of life insurance should you have? There are three basic types of life insurance you can choose from: term, whole life, and universal life. So, this is term insurance. They're guaranteed coverage for a set period of time or until a specified age, as long as premiums are paid. Usually renewable once the time period has expired, although it's likely premiums will increase. It provides a death benefit if you die within the defined period of time. It does not accumulate cash value. Generally allows you to purchase a higher death benefit for your premium dollars, frequently the most affordable coverage. And there's the whole life. This is called permanent insurance because it remains in force for as long as you pay the scheduled premiums, okay, for your lifetime. Premiums are designed to remain level over the life of the policy. So that premium or that monthly payment is going to be fixed. You have the potential to build cash value that is tax deferred, and you may be able to access these funds on a tax advantaged basis. When you pass away, your beneficiaries will receive the amount of the death benefit minus any outstanding loans and loan interest that may be due on the policy. Then there's universal life. Universal life, this is another type of permanent life insurance that has the flexibility built into it. The flexibility allows you to adjust the face amount of your policy and the premiums that you pay. It does build cash value without paying current income taxes on the on the increases, and you can potentially access the funds using tax-free loans and withdrawals. Flexibility allows you to stop paying premiums if there is enough accumulated value in your policy to cover the cost of insurance each month. You can then pay additional premiums to build back up accumulated cash value. You may be able to increase or decrease your death benefit depending on your life insurance needs, and increase may require additional underwriting. Now, two of the most popular types of universal life policies are fixed universal life and index universal life. One of the main differences between them is how the policy's interest is credited. Both offer you varying degrees of guarantees and returns based on your appetite for risk. Fixed universal life interest rate is declared by the company. Index universal life interest is based on the changes in value of major market index. Okay, so taking a look here at this chart, life insurance product overview, term life, the death benefit is fixed, the premium level or increasing, and does it have cash value? There's not in a term policy. In a whole life, you have a guaranteed death benefit, the premium is fixed, and the cash value is a fixed rate. It's guaranteed, possible dividends set by the company. Then you have the traditional fixed universal life. The death benefit is very flexible. The premium is flexible, and it's based on the current interest rate, guaranteed minimum interest rate set by the company. The index universal life, it's very flexible for the death benefit. The premiums are flexible, and the cash value column here, the interest credits based on the positive change in a major market index, guaranteed minimum interest rate set by the company. So there's more to life. What are living benefits? So this is life insurance can do more than pay a death benefit. With powerful riders, you may be able to accelerate the death benefit due to qualifying illness or injury and potentially provide a guaranteed source of retirement income if you live too long. Accelerated benefit riders are optional. No additional cost riders that can allow you to access all or part of the death benefit while you are living if you experience a qualifying terminal, chronic, or critical illness or critical injury. You can use the benefit for any purpose, with the exception that proceeds for chronic illness in the state of Massachusetts can be used to pay for expenses incurred for qualified long-term care. Living benefits are benefits for living. Okay. This is what's so awesome about these living benefits is that you don't actually have to pass away to benefit from them. So here are some qualifying events. If you have a terminal illness, you can access your living benefits. If you have a chronic illness or a critical illness, you can. So, terminal illness, generally, if you have been diagnosed with a terminal illness that will result in death within 24 months, 12 months in some states, but this has to be a certificate of illness by a physician. You can't just claim it, okay? Has to be written out by the doctor. So same thing for the chronic and critical illness, okay? A doctor for the chronic illness, a doctor has certified within the past 12 months that you are unable to perform 2 out of 6 activities of daily living for a period of at least 90 consecutive days without assistance, or that you are generally cognitively impaired. These are the activities of daily living: bathing, continence, dressing, eating, toileting, and transferring. So 2 out of the 6. If you couldn't perform those, okay, you could access your living benefits. Critical illness includes ALS, Lou Gehrig's disease, aorta graft surgery, aplastic anemia, blindness, cancer, cystic fibrosis, end stage renal failure, heart attack, heart valve replacement, major organ transplant, motor neuron disease, stroke, sudden cardiac arrest. Then another category here is critical injury. The critical injury includes coma, paralysis, severe burns, and traumatic brain injury. So these living benefits could be used for, but they're not limited to, household expenses, home modifications, nursing home care, adult daycare, your regular bills, quality of life expenses, and lifelong dream vacation. So basically, you can use that money for whatever you choose, right? So let's make sure that you are protected, that you are covered if you die too soon, if you become ill, or if you live too long. Guys, I want to tell you, the seriousness of making sure that you have a life insurance policy. I hope that the information that I shared with you today was very informative. If you do not have a life insurance policy for yourself, for your spouse, or for your children, contact me. I'm going to be able to help you in any of the United States, any of the 50 states. It's not a problem for us to have license in your state. Okay, guys. I appreciate your time, and we will see you in the next video. God bless.